There are various factors that can have an impact on an asset or commodity. Now, if I tell you that the price of Bitcoin has risen by 5% today, you would ask me, why did that happen? Or what are the factors that affected the price movement for that particular cryptocurrency? There are various factors that can have an impact on an asset or commodity. This means a lot of factors tune in together to get the current demand and supply to fluctuate, hence causing changes in the price of the asset and commodity. We, as traders and investors, need to look at these factors that can directly or indirectly influence the respective asset. So let's take an example of this with respect to stocks first, so that we can compare this with cryptocurrencies later. For investing in stocks or publicly traded securities of companies, a lot of factors are accounted for, such as market sentiments, industry trends, economic factors, and expected or unexpected news of the stock. This in general remains the same and on some levels applies to cryptocurrencies as well. But there are many more factors that directly affect the shares or stock prices, such as the management, PE ratio, dividends, interest rates, and many more specific factors that can determine the future price changes of a stock. The latter is a working principle more inclined towards fundamentals to determine the price movement, whereas the technical analysis can be used to rely on historical data of the asset to determine the next price movement based on previous patterns. Most importantly, please understand that all patterns don't necessarily repeat, as these might have been formed under certain special circumstances that don't hold true while you are trying to predict a reoccurrence. So don't base your strategy solely only on patterns of the past. Be on the constant lookout for new metrics that might influence your trading strategy. Also, different factors need to be considered while preparing your trading or investment strategy. Most people going for short-term trades might choose different factors and rely on different indicators as to someone who wants to open a position for a long-term investment. Maybe for a short-term trade, most of the factors taken into consideration are more inclined towards immediate news or technical indicators or such other factors. But for the long-term investor, fundamentals of the asset class or asset itself might be more reasonable to factor in while buying into a long-term holding position. A fundamental analyst studies both economic and financial factors to determine if the value of an asset is fair and can base their decision on the same. Now, let's look at some of the factors that can affect the price movement for cryptocurrency markets in general. As stock prices are affected by external market conditions and sentiments, some fundamental factors also account for price movement in cryptocurrencies, such as halving or any other technology factor that is deep-rooted to the project. Let's see a few examples of how a price of a cryptocurrency might be affected. Let's start from United States and global markets. While cryptocurrency markets are considered to be less correlated to the traditional markets, there are certain news and actions that can still affect the price movement. Let's take an example of the Federal Reserve or any other central bank globally announcing a policy that directly or indirectly affects the prices of interest rates, or maybe even an increase in money supply that leads to an inflationary outcome. The cryptocurrency markets might also face impacts of this legal action, as we need to understand the money flow between markets and also the market players that might be mutually exclusive to both the markets. Let's also look at something else that might affect the price of crypto, such as Bitcoin. Long-term adoption. Bitcoin has been proving itself over the decade as the highest performing asset, with native properties associating it to gold, especially as a store of value and also as a hedge against the weakening dollar. Then naturally the demand to keep it as a reserve would create long-term adoption of Bitcoin. For the same reason, Bitcoin is being considered by institutional investors, including but not limited to investment funds, hedge funds, banks all around the world, which is creating a positive acceleration to the price and value of Bitcoin in general. Scarcity or limited supply of an asset would definitely have a growing trajectory in value of the asset over time. Keeping in mind the ratio at which demand is increasing, it definitely has a positive impact on a currency like Bitcoin and Litecoin, which have limited supply capped off. Also, if there is sudden news such as a coronavirus pandemic or any other major incident, such as a negative regulatory reform or malicious activity that could compromise the system, then the prices might be negatively impacted as well. With respect to the cryptocurrency market, so many projects are now crypto projects. As I said earlier, more than 8,000 crypto projects exists out there. You always want to be backing the right projects. But wait a minute. One of the most important things to remember is the timing. You don't necessarily have to catch a falling knife, do you? What that means is that out of 8,000 projects, like most startups, they try and fail. So you don't just want to see a mid or low cap project and fill your bags with their token. We need to understand different factors regarding the project itself. Factors like the state of the project it's at, whether it's pre-launched or has active users, or does it have a native blockchain? Is the technology secure and promising, and other factors that include such as who are the founders, investors, or early backers of the project, what exchange is the cryptocurrency listed on, and many more. As the case with any asset, cryptocurrency is also dependent on external factors, and all these factors cumulatively impact the price of cryptocurrencies.